Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about FIEM Industries, a very interesting auto ancillary play. So whether the bottom has been made in this stock or not, let's understand. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about FAME Industries, here's a request that kindly support me on Patreon. Once you do that, it will help me grow the channel, it will help you also get more out of me in terms of answering queries on stocks and companies. Once you get the $10 membership, you'll have access to my portfolio, my watch lists, and also ask me questions on a daily basis with respect to companies as well as sectors. You can also directly email me if you have a number of stocks with you, and we can work things out with analyzing that as well. Now about the company, FAME Industries was established in 1989, and they are into auto ancillary and auto component manufacturing. They have expertise in making auto lighting, so boast of marquee clients, and they make headlights and side lamps, etc., and backlighting, brake lights, etc. For a number of products spread across India, for a number of companies spread across India and some countries abroad as well. They also produce rear view mirrors and canisters, so that is also their products, and their clients include Suzuki, Honda, Yamaha, Bajaj, and LML. So it is a marquee brand. They have a lot of clientele with them, but they don't have the pricing power, and the pricing power always remain with the OEMs. If you look at the numbers of the company, then the market cap of the company is 450 crores. The sales is 325 crores that has come up versus 333 crores. I'm talking of the December numbers. Profit went up by 110% to 26 crores, but that is due to some exceptionals. Debt has reduced over time, and which is a very good, which is very good. But the future of the stock and this sector looks bleak, and that's why the stock is not moving up. There's a tax write back of a few crores, and that has helped the bottom line. So as I said, these are the exceptionals that helped the profitability go up. Currently it is trading at 5 to 6 times earnings, which is not expensive at all. High combined promoter and institutional holding with only 13% free float, and that is also a very big positive for the company. So overall mixed numbers, and high promoter holding is good, debt reduction is good, but the profit number has come up due to that exceptional of a tax write back. Otherwise the company would have done a very less profits this time around, and hence that just shows you that the sector and all the companies are under pressure in this sector. So if you look at the performance of the stock, it has been very dismal. It has been very disappointing. Although the company is really good, and I have seen that happening between 2010 to 14, that the company has done really well. But over the last 4 5 years, the company has really been in a downturn of sorts, and really suffered because of the auto slowdown. So stock has fallen relentlessly since January 2018, when it made an intermediate top. Had fallen around 75% from those highs. So over the last 2.5 years, it has fallen 75%, and more fall took place in late Feb and early March, and during that 1.5 month period, the stock fell very sharply, and the decline was vertical in nature. Has recovered somewhat from those levels, but it hasn't recovered very smartly as many chemical companies or pharmaceutical companies or even consumption companies have recovered. Auto ancillary companies, and particularly in the small cap domain, have not recovered that quickly. So FIAM is not an exception at all, and it has also not recovered that quickly. Results have remained subdued, and only a tax write back have helped the company put up a 26 crore profit this time around. Otherwise it would have been virtually a loss, no profit no loss situation, and profits would have declined sharply on an year on year basis. The return ratios are extremely low at 4 5% and all that, between 5 and 10% more or less. I have not put that up due to that reason, because the return ratios itself are nothing too big to write home about. So why we have seen such a slowdown? So auto industry has gone through a lot of stress, and over the last 3 years, at least for the last 2.5 years, they have gone through a tumultuous decline, and that is why I'm saying that over the last 50 years, if you look at the industry, they have gone through a 6 7 year of good period and 3 years of very bad period, three and a half years. We are in the midst of that extremely tough period in which autos might not do well even for the next 6 8 months. And since the projection of further stress is there in the next not quite 2 years, but at least for the next 6 months to a year, and that's why people do not want to get into it unless the numbers show some uptick. And I would say the same, that unless the numbers really come up very good, do not get into such a stock. Let the stock double even from here, and then you get in. You will be more sure about the stock with the numbers getting better, rather than buying now and hoping for the numbers to get better. But your stock will not go up on hope. So you need to understand that. So commercial vehicle segment has been most hit, and even passenger vehicles, two wheelers, has been hit badly. And most of their business used to come from the commercial vehicle lighting, truck lighting, or semi, you can say, lower vehicles and all those. So all those taking into consideration, we are in a tough time at the moment. So economic slowdown has hurt infra to the core, and current pandemic has also not helped. So the current pandemic situations has also meant that the business has completely slowed down for April and May. So the June quarter will also be extremely tough, and people understand that. And probably this whole FY21 will go in extreme losses, and then probably people take a note of it and then come back to such kind of stocks in December or January. If you look at the technicals of the stock, then the major long-term support lies at around 350. So probably on major decline, say if market really falls big midway through in August, September, then declines towards 400, 380 could be good levels to get into. A resistance zone is between 550 to 600 levels. So probably this 400 to 600 levels are good accumulation period, but then you would have to wait for around 6 to 7 years or so, at least 4 5 years, for this to really materialize this trade. A strong up move is expected above 600 610 levels. See, may have seen the major lows of 350, and that's why I'm saying that any declines towards 400 is a good buying opportunity. I think 350 should not be broken, and probably 6 to 7 months down the line we will see a little bit of up move in all auto ancillary stocks. So if you have that time frame, you can wait and see the losses on your portfolio on these stocks for about 6 7 months. Then of course you can get into the stock. Currently it is extremely weak on charts. It will become stronger once it gets past 610 on a weekly basis. Yes, better to buy above 550 600 or closer to 350 400 levels. So my call on the stock is hold if you have it. So if you have it, you can hold on and add a bit at 350 370. If you don't have it, avoid this and probably get into a proper auto stock. The cycle will turn around in a 2 3 quarters, 4 quarters. So you can add these auto stocks like Eicher, Maruti, etc., Hero. Buy top players in auto. That would be my suggestion. It's a good 5 6 year play. It will do very well, but no immediate reward over the next 6 months to 9 months can be expected. So this was my video on FAME Industries. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.